Hey guys, Matt from Upsilon Mining coming back at you with another video where we like to learn together about cryptocurrency mining and cryptocurrencies in general. So today's topic, I want to focus on the recent fifthening of the block rewards for Ethereum Classic. As some of you may know, that Ethereum Classic was slated to actually have a block reward reduction sometime in April of this year. And taking a look at this chart here, we are on EM20 era 4, which is a block reward reduction schedule. And this was slated to occur in April of 2022, and it already did happen a few days ago, where the 15 millionth and 1th block was discovered, causing a 1/5 reduction in the block reward from 3.2 Ethereum Classic to 2.56. Yes, that is a 20% reduction of the reward. Now, I think this is pretty interesting. As I learn more about cryptocurrencies, the more I understand why they do things like this to help ensure the currency's value for long-term holders of the coin and to maintain the value in the long run. It makes a lot of sense to reduce the rewards given to miners. So by reducing or limiting the amount of circulating supply, that you maintain the value of the coin. I totally understand that. So I found that pretty interesting. I know other coins such as Bitcoin have halvenings, and I know there's going to be a halvening of the Bitcoin reward in 2024. Which I think is pretty interesting. That it's just interesting why ETC is having a fifth reduction and as opposed to a half reduction. Well, thank goodness it wouldn't be a half reduction because the profits would have dropped even more. So let's take a look real quickly over here at the current value of Ethereum Classic. So we're going at $30.47 per coin here. If you take a look here with the circulating supply, so the circulating supply I guess they want to maintain, so they're at 64% of the maximum supply that will be provided. So there's 134 million coins right now in circulation, and this max supply means it'll only ever hit 210 million coins, right? If you read it through here, the maximum amount of coins that will ever exist in the lifetime of a cryptocurrency, it is analogous to the fully diluted shares in the stock market if this data has not been submitted, blah, 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 blah. So basically, there won't ever be more than 210,700,000 coins. And in order to maintain that supply, circulating supply doesn't get too high, they need to slow down the amount of coins that are actually created during mining as given as rewards, right? So that's essentially why it's on this reduced schedule where it would reduce by a fifth every few years according to the schedule. I think the next halvening, the next fifthening will be in May 2024. So we're safe until May 2024. That being said, let's take a little look at the analysis here. This is, let's see, the 1 week price of the coin. So it looks like there was, I think this did happen around the 20th. So I don't know if it's correlated to this at all, but we do see an interesting decline in the value of the coin. I'm not sure if this is related to the fifth thing at all, but please chime in below if you know more than me. I'd like to learn. I am learning as we go, and these videos are pretty much my attempt at learning the most I can about cryptocurrencies in general and learning from you guys too. So as much as I'd like to be a teacher and entertainer, I also like to learn from you guys to, as I improve my knowledge, I also improve the channel's ability to deliver knowledge to other people, accurate knowledge, and so forth. So let's take a look here quickly at what we have for, I don't want PowerShell, my bad. You can tell I'm a developer, I use PowerShell. So what we have here is, if you take a look here at the, let me just get that in view, 2 miners. Yep. So, oh man. All right, let's just do a comparison between these two measurements here. So we get the hash rate and the difficulty. And if you look closely here, this is interesting as well. On the 25th, it looks like it was reduced. Actually, sorry, not the 20th. We do have a steep decline. goodness. Why is it not highlighting that? Yeah, so there is a steep decline in both hash rate and difficulty. So, I mean, here's an example, or kind of like using hard evidence here, this graph, that the more people that are mining a specific coin, the higher the difficulty, right? So it becomes harder and harder to find new coins just so it maintains a certain number of coins released per time interval, right? And the same reward has to be split across more miners. So that's why usually when the difficulty is higher, you tend to make less money mining because you're making less coin. So when the pool that you're on discovers a block, someone in that pool discovers a block, you've submitted your shares towards finding that block, and all the rewards are divvied up amongst everyone in that pool. So the more people there is, obviously, you get a smaller chunk, a piece of the pie. So if you look here, the Ethereum Classic hash rate is at 26.26 terahash right now. When it was roughly before, you could see there was an average, almost like an average of, significantly higher, about 28, even spiking as high as 29 terahash on the 24th, before the Fifthening. Maybe people were trying to hop on the Ethereum Classic and try to get some more of the coins for themselves before the Fifthening. And on the 25th, we see a drop, basically, in hash rate. And we can only speculate that this is due to miners hitting up tools like What to Mine, or even NiceHash, auto changing the algorithms and the coins that it's mining based off profitability. So it's due to the Fifthening. Essentially, the reward was dropped by 20%, so it dropped the coin down to the profitability level, and everyone hopped off the Ethereum Classic network to mine another coin probably. And you can see it's slowly started to recover, but it hasn't recovered back to baseline, which is, obviously at this point, and we don't suspect that it would. I wouldn't suspect that it would anytime soon, as long as the profitability maintains itself as relatively low. Now, for me, this affects me specifically with regard to my 574 gigabyte cards. Now, I did buy these cards back in like January, and I bought them. I got like a lot of 10 of them, and one of them actually died on me, so I ended up selling it used on eBay for parts. But I have 9 of them right now mining, and then we're just going to leave the values in roughly that it's giving here for 9 570s. We're going to punch the calculator in here. I know it's not exactly from the wall, guys, but let's just get close to what to mine is measuring here, because it's relatively relative, I would think. So we're looking at $1.64 per day US. Now that would have been very easily 20% higher. So we'll just go so this is actually 2.05. So this would have been $2.05. So 0.8, yeah, $2.05 per day before. Now we're down to $1.64. So 2.05 minus 164. Yeah, essentially profitability is down 41 cents per day, which sucks. I mean, it's not a lot to begin with, but this sucks because of this. Times 365. Oh my goodness. 2.05 minus 1.64 times 365. So we're looking at $149 a year. Now that's not that much, considering you get 9 of these cards running on this Ethereum Classic. Might be a little more than that. But I think for me, I'm not going to be pulling these cards off necessarily either. I mean, I can switch to something like Ravencoin, but that's going to generate a little more heat, and it's going to use more electricity. I don't want to increase my base electrical bill as well, because I am paying that out of pocket, guys. I'm not cashing out. I'm basically hodling all the coins right now. I'm not cashing out a single dime to pay electric. So if we look at just one coin, it's pretty crappy. 1.570, 4 gigabyte run Ravencoin is 22 cents per day. We're at 12 cents a kilowatt hour, and it's 18 cents per day on Ethereum Classic. That's not very good. Now, what I am sort of thinking is not to think too short term. I think in time, Ethereum Classic has a lot of growth to do and could actually pump at some point in the future. So, from my understanding, from doing some research of my own, is that Ethereum Classic and Ethereum, or both of them actually, are correlated closely with Bitcoin as well. So, as Bitcoin's value does pump at some point, and some people are suspecting it'll pump, actually, when there's a halvening in 2024, when it goes up in value, it'll actually increase the value of other coins such as Ethereum Classic and Ethereum as well. Now, I'm not like obviously, I'm not like an economist or some sort of cryptocurrency guru or anything, but it does kind of make sense if Bitcoin is like the US dollar of the fiat currencies in the crypto world. If that goes up, maybe the other currencies will kind of follow with it. So, I think that kind of does make sense. So what I'm thinking is, even though this current profitability might seem low, looking at the like the yield actually, so if we look at the yield here, estimate rewards, 24 hours. Yeah, so these are the rewards. So 0.171, yeah, 0.0171 Ethereum Classic per day would be the yield. So just getting that Ethereum Classic, if you can, it's almost like, I don't know, is it kind of like speculative mining, guys? What do you think? I mean, it's going to go up at some point, hopefully, and if it goes, 2x, 5x, or 10x even in value, that could be really good. I mean, if you look at the price of Ethereum, even the value of Ethereum Classic, so we're at $30.53. Ethereum is significantly higher than that, obviously. Now, I don't understand all the factors that goes into what makes a coin worth what it is, but I think a lot of it comes down to in the circulating supply, the demand, the amount of people that are buying those coins and holding those coins also increases the value, right? If there's less of them available, then the value will increase on them. Even Ethereum's dropped in value too, right? So, considering that a lot of the coins are actually down now, it's not. So once it looks like this dropped around the 26th, started a decline on the 26th. Actually, no, that's all today. If we go like a month, yeah. So it was relatively high in the 5th, and it looks like it's kind of dropping. It's been like a steady step downward since the 7th of the month. If we look over here at Ethereum Classic, let's see if there's any correlation with that. I mean, maybe there would be. Just kind of like monkeying around here, and let's see. So we go back to a month here. So it looks like Ethereum Classic started dipping down also at the end of March in a very similar manner. So they almost like everything is kind of dropping down. Let's look at Bitcoin at the end of March. So let's see Bitcoin. Is it right at the top? Yeah, it should be. Bitcoin, if we take a look at the 1 month values here, so yeah, look at that, guys, like that's crazy, eh? Right at the end of March, even Bitcoin started to trend downward. We had a couple of pumps here and there, but like in overall, it's been just dropping, and a lot of it's related to the inflation and issues with the government policy in the U.S. and things like that. I do know that, but long term, like obviously, where we're at now, we've been lower before. Like we're actually part of the lowest of the lowest, but it's been really low back in, like, obviously, all time. Like if you look here, obviously that doesn't count over there, but like we've been significantly lower here in these points here. We're obviously low now, but there's opportunities to pump again, and hopefully we will. I'm not an economist. I'm not even an expert. I'm just kind of looking at just some of these charts and trying to analyze what it's looking like, and like seeing if there's patterns between the three coins. Like so it looks like, if that hypothesis is relatively true, that Ethereum Classic and Ethereum follow closely in line with Bitcoin as the baseline, there's a good chance that Bitcoin will actually go up in value at some point as well. Oh, sorry, not Bitcoin, Ethereum Classic. And as it follows a trend, we could also continue to hope that this trend will continue as well here at the difficulty. So if this difficulty maybe it'll continue to drop further as people can't continue to mine it profitable, or more short-term thinkers. They're looking day to day and they're trying to pay their electrical bill day to day, and they can't do that. If you can pay your electrical bill without any of the money from the mining, I think you're in a better position. But yeah, if this maintains long enough and the difficulty drops enough, my theory is the reward will be worth. Well, the reward, actually, the block reward will be the same, yes, but there'll be less people on the pool, or whatever pool you are on, and less people, therefore, it's got to distribute the reward to, because the difficulty is now lower, if that makes sense. So, hoping more and more people hop off Ethereum Classic. If you continue mining it and hold on long term, the value of the coin should hopefully trend back up at some point. I'm not an economist. This is not financial advice. This is just kind of what I'm looking at with my very naive and beginner mentality when it comes to cryptocurrency. But I think at some point it will trend up with the rest of the crypto world, with Bitcoin and Ethereum. And you'll be in a prime position as the difficulty drops, collecting more of the coin, right? Because the difficulty will drop. And when the value pumps, you will be in a better position. So that's kind of the way I'm thinking of it when it comes to Ethereum Classic and my 570s. What do you guys think? Does that sound about accurate? Is there any gaps in my thinking there? Comment below, let me know what you think. And if you like this video, please like and subscribe to the channel, and I'll see you in the next one.